Hello and welcome to the next 100 Days podcast. My name is Graham Arrowsmith.
And my name's Kevin Appleby. So today, Graham, we've got a guest who specialises in teaching people how to invest and trade and manage their risk.
Yeah, a couple of weeks ago, I met Siam with a couple of other people that we know of, or at least one of them. And John Moran and Rob Comer work with Siam on a new venture. Now, John and Rob were on our podcast some time ago and referenced that within the show notes.
And I seem to remember that one of those was infamous because of their appearance on Blind Date.
Well, so Siam might not know about that, so this might be evidence. But
Wait, so
oh yeah, first of all,
that's amazing.
Well done, Kevin. You'll have to leave that in, but Siam, you're going to have to ask John or Rob which one it was. But I think it must be obvious to you which one it was. Anyway, Siam, welcome to the next 100 Days podcast.
Thank you. I've already my day's done. I've got ammunition now. I just need to find the clip. I just need to find the clip.
Yeah, I would imagine it's yeah. Well, put it this way: it's the one that I used to work with, but that's not going to narrow it down. Well, it probably is actually. It's going to narrow it down.
Yeah.
Okay.
I hope there's a clip online.
Yeah. Oh, I'm sure there is. But anyway, he's moved on to bigger and better things now. He probably doesn't talk about that anymore. But Sam, you're quite a fascinating character. You've got so many things in your armory. But we want to talk to you a little bit about the thing that you're involved in now, and it's called the DSV Fund. Now, tell us, what does that stand for, and what is it all about?
So DSV is Digital Strategies Ventures. Basically, I've been trading for 20 years now, and full time in crypto since 2016. And the thing that has led me to crypto. Sorry, I've got a bit of a longer answer for this, which sort of provides a bit of context. It's just that, so I consider myself an investor first and foremost. And back in the day, I was big into gold and silver because I was always looking at ways to try and beat inflation, have a hedge against uncertainty, all that sort of stuff. So I set up a gold and silver bullion business. So we were the fourth biggest in the UK at one point. And the goal for me was just to get cheaper gold and silver for myself. But then I quickly realized once I looked, well, I say quickly, it took me about 5 years to realize this, that when you look at the global expansion of fiat currency, so every central bank prints currency willy-nilly to the tune of 15% per year. Whether, and that's in fact the longer time epoch that you look at that, it's even a higher percentage. So my personal rule of thumb is that the global capital hurdle is 15%. So on average, every central bank on the planet expands the currency supply by about 15% per year. So in real terms, if your savings, investments are not making more than 15% per year, you're getting poorer in real terms, in real purchasing power terms. And what's going on in Argentina is a live train crash that we're all witnessing right now. Venezuela as well. So then I started scouring the globe of, okay, well, what beats US M2? So there are four ways to measure the currency supply, but most people look at M2.
Right.
And so because the US is still the king daddy, I thought, okay, US M2 is the one you need to benchmark off. Mm-hmm. And there's not much that beats M2. So ratio charts are very important in my opinion. So if you look at house prices against US M2 or UK M2, house prices have been falling since the 1980s. So they don't beat M2. The S&P 500 doesn't really beat M2. It has spits and spurts, but it's still the same as it was 20, 30 years ago. So we're having silent crashes in real purchasing power and real wealth, which is why a lot of people, they may look at their bank balance and go, oh, I've got 500 grand more than I used to or whatever, but I still feel poor or whatever. That's because people don't understand M2. And so obviously I've set up a couple of private equity firms in the past because I realized that business is, the only predictable way that you can beat M2. Like especially from 0 to 1 million revenue, you can get, hundreds of percent ROI per year up until a certain point. You're both business owners. You can probably see that. So I specialize in my PE firms of basically either setting up, running, growing, and selling, or buying into smaller businesses. Because until you get to a mil revenue, like the trajectory is steep. And so, sorry, long story short, in 2016, I came across crypto, or Bitcoin properly. I mean, I was the biggest critic of crypto since 2012, really. But I realized I was an idiot. And I realized that Bitcoin is the financial arc that everyone needs. And it consistently beats M2 by a country mile. So I've been heavily into crypto since then. And I guess fast forward to now, I'm a big fan of open source, decentralized, direct, distributed AI.
Right.
So DSV basically focuses on open source AI and that lovely straddle between that and crypto.
Wow. So if you're an investor and you were struggling with Siam Kids, answer to that, what is DSV?
Sorry.
Then and you wanted Siam, you were going to put you on the spot, Sam, because I know that you're a keynote speaker. You basically you're almost like a Renaissance man. Well, you are a Renaissance man, and I think you are. And basically, one of the things about you, though, is you can make things relatively easy to understand, because you've told us that sort of journey. You've given us this idea of this M2. This is a sort of an economics view of how quickly the money supply, or it's a description of the money supply. But basically, can you try to summarize what an investor should do to even consider the DSV fund?
So, okay, I guess that there's two answers there. So the first of all, I guess the quick, easy answer regarding DSV is that we are for fund of fund managers, family offices, and very high net worth. So what we definitely don't want to cater for, and we can't even, it's for retail. So really, it's for people that can't be asked. It's probably the incorrect wording, but can't be asked or won't be asked to learn about crypto. But want exposure into crypto and also AI, because you have to follow narratives. So obviously, if you look at the mobile phone, take the telephone. It was the fastest growing adopted tech in recent times. Then the mobile phone came along. That was adopted by the world a lot faster. The internet came along, the fastest growing thing ever. And then we had crypto. And believe it or not, even though people still think it's shitty monopoly money, it's up until recently, was the fastest growing tech ever, faster than the internet. And guess what's come along in early 2023? I guess the rebirth of AI. AI has been around for, I don't know, 60 years really, but it's the fastest. Let's take LLMs. LLMs are the fastest growing tech in human history. And so money always flows from the uninformed to the informed, and narratives rule everything. So if AI is the fastest growing thing ever in the real world, and crypto is the second fastest growing thing, and also crypto likes to follow the real world, I think you'd be almost remiss to not have personal exposure to AI and crypto.
And the logic that you explained earlier was that if you're sort of below the sort of 15% per annum growth of your stock of money or your investments, then you're going the Kamala way. If you're above the 15%, then you're going the Donald way. So basically, we are recording on this on the day that Donald becomes the 47th president of the United States. So just in case you are watching this on YouTube, I want to celebrate that very moment, which bought by Kevin Appleby when you were over in America. Was that right, Kevin? And
that's right.
And you got me to wear it at the what was it called? Was it the the run in Newcastle,
The Great North Run,
the
yes.
Great North one, and I because it is so loved in England, then I thought I was going to get beaten up by people, but I love the fella. I'm so glad that he's the president of the United States.
And it
I
was
think it'd be great.
bought right in the sticks in the southern states in Tennessee in a tiny little town that is famous for its Jack Daniel's whiskey.
Ah, right. I knew there'd be some sort of liquid involvement in that. However, but the point is, that 15% level is something that the sort of involvement with AI and crypto, you should be comfortably above that level, Sam. I mean,
Massive.
I don't know how much more you might be thinking, but above that
I've
level.
made over 9,000% since 2016
Oh, right.
ROI.
Okay.
And so not only does Bitcoin massively outpace inflation, like real inflation, M2, I never buy Bitcoin. So Bitcoin is this massive oil tanker, which is very slow to move in crypto time, so to speak. But I tend to find the sort of the faster, more agile catamarans that go alongside it. So Bitcoin for me is the barometer. It's the mass leading sort of indicator for crypto as a whole.
So
Yeah.
how is it? Sorry, forgive me, but I guess it's so logical that you've spotted the catamaran. But how did you spot the catamaran from the tanker? How I know the tanker is probably going one way and then another, etc. Fairly slow, relatively.
Yeah.
But those catamarans can presumably lose you a shed load if they, I don't know, get buried by a wave.
Yeah. So if you listen, so are you aware of Benjamin Graham? Back in sort of early 1900s, he was Warren Buffett's mentor, basically.
Right.
Warren Buffett based his whole investing sort of methodology from Benjamin Graham. And one of the things that he mentioned is that money follows confidence to a degree. So everything is underpinned by confidence, whether it's currencies, sovereign states, to investments, etc. If people lose confidence in the CEO of a company, the stock price goes down. That bit's quite logical. And in crypto, they sort of take that confidence, I guess, lesson, and it's like amped up way more. So crypto is run on narratives, and it moves in 4-year cycles. So the 2013 cycle, it was all about Bitcoin copycats. So if you look at the whole crypto market was, oh my God, we need to try and copy Bitcoin. 2017 to the next cycle. So when I say the years, that's the year of the blow off top.
Right.
So the 2017 cycle again were layer ones, and then a little bit of smart contracts. So you have a main narrative, then a sub narrative, and in the next cycle, the sub narrative becomes the big narrative. So in 2021, with that cycle, smart contract platforms was the boom. We had the Ethereum killers and all that sort of stuff. And then AI was the subcategory. And now this cycle, 2025, or it's 2024 now, but 2025 is where we're going to see the blow off top. AI will be that main narrative. And then the sub narrative will be RWA, so real world asset tokenization, something which I've been harking on about for about 7 years now. But I believe the next cycle after 2025, so in 2029, will be the RWA cycle. And BlackRock have already said, we're going to tokenize the bond market and the real estate market. And that's BlackRock with over 10 trillion and AUM there. So they're going to make it happen, but there's huge amounts of behind the scenes plumbing work that needs to happen.
Right.
You can't just tokenize the debt market like that. It's just.
But presumably with the sort of advances in AI, that kind of work becomes, I don't know, maybe a little easier.
Yeah, 100%.
So just remind us again of this new wave 2029. It's going to be the real
world asset tokenization.
Real world asset tokenization. So a real world asset is a bond, or
a stock or a house or a car, or IP.
So BlackRock then are going to, as you say, tokenize that. Does that mean to say that this is almost like a crypto token? Is it when you're saying tokenize it, it's some sort of
Yeah.
digital appreciation of that asset's value?
What sort of? So the easiest way I can explain that is let's take the property market. So one thing which I've in 2017, I was like, someone needs to tokenize property because it's, the property, the real estate market, as the Yanks say, is probably the most incumbent, archaic system I've ever seen ever. There's no reason it should take months to buy a house. Then you got all these chains, and if the chain breaks, then the house sale falls through, and you have a million middlemen all trying to top slice and get their grubby mitts on your, not to mention the government with all its tax and SDLT and whatnot. So if you take things back to a first principle view, like what is the most efficient way of selling a house? Well, first of all, when you sell a house, you have one option. You either buy or sell, and you hope you sell it to the right person at the right time, at the right price, with the right solicitors, right estate agent, whatever.
Yep.
It's inefficient. So wouldn't it be better if, I don't know, let's say this was a house, if instead of having one unit, I could chop this up into 100 tokens, and then all of a sudden it becomes like a security. So it becomes like a stock. So if it's 100 tokens now, which is on the blockchain, it would come with a shag, no doubt, so a shareholders agreement. There will be no doubt a beautiful sweet spot where the homeowner could own, I don't know, 26% of the house. They have full homeowner rights. They can put up the shelves, whatever. But then the local community or someone from the other side of the world could own some of your tokens. Now, not only would that release a huge tsunami of liquidity into the market, but home ownership would be way more feasible, because renting isn't ideal. Buying a house really isn't ideal when you look at the maths. But if you owned a part of the house, but for all intents and purposes had full rights to it, instead of getting, into 40 years of debt, you only need to buy, say, 26% of the house.
Is it possible, though, that presents a problem for the householder? Let's just say you live in leafy Harrogate, and I don't know, Bill Gates, with his evil ambitions, comes to Harrogate, loves the area, and would like to churn out all the people who live there by buying up the 75% or a significant or more than 50% of that asset value, and then said, right, chum, off you go. We don't want you to live here anymore. We've got a design on a whole lot of illegal immigrants we want to put into Harrogate and try and improve the place. Now, that might be a little bit provocative to some, but I don't care. But at the end of the day, is that possible?
So I guess you could have AB shares. So the homeowner would have preferential shares to the point where, I don't know, let's say you owned 30% of a house with the preferential tokens, let's say, you cannot be evicted from your own home, let's say, something like that.
Yeah. You can understand that, there'd be the reluctance. Plus, there are different qualities of homes as well, aren't there?
Oh, yeah. God, yeah.
And that would be quite challenging.
But the thing is, like, there's $250 trillion worth of real estate, which is locked up. That's an illiquid asset.
Yeah.
The moment you can tokenize that, you release all of that liquidity into the world, which is net positive in every respect. And also, if there was a right move equivalent, or Zoopla, or I don't know, whatever it is in the States, let's say take right move. If this digital, or if this tokenized property was on a tokenized or digital blockchain type of right move, you could buy a house in 5 minutes, because all of the contracts, the deeds, or the surveying, all that sort of stuff will be in a smart contract, ready to go. So it would just be like buying a pair of shoes on Amazon or something. You don't need estate agents or surveyors or the lawyers, because it will all be on the smart contract.
Yeah, and that's one thing that's always annoyed me about buying a house, is you get the solicitor going on and saying, oh, we've got to do all these searches.
Yeah, searches could be done by AI.
You did all these searches when I bought the place. So why am I doing them again when I'm selling the place? They're going to produce exactly the same resulls.
Yeah.
Living in
unless you've been digging a big hole.
It's a mining survey.
Yeah. $2.5 grand for some searches.
Mm.
And there's still just as much risk of the ones that ain't so old that they weren't on the map in the first place.
Yeah.
It really, really annoys me, that sort of thing. So why not just streamline the system? Smart contract.
Is it then the biggest? I mean, to Kevin's point, is that with all these sort of peripheral things that go along with selling houses, is the real estate market the biggest unrealized opportunity, or the real world asset
No.
opportunity for the world? Is that, is it not just in the UK where property is the,
Yeah.
almost beginning and end? Is it everywhere in the world? Is that the thing that's going to liberate lots of value into the rest of the world?
So yes and no. For the real person, with the average person, yes, it will be, life-changing across the board. But there's only $250 trillion in real estate.
Right.
The bond market is 350 trillion. So by size, the bond market is the biggest market on the planet, really. But for everyday in life, like if instead of saving up 10% deposit to buy a 300 grand house, you now only need to spend, I don't know, come up with a 10% deposit to buy 26% of the house or whatever. Like with companies in the UK, for example, one of the things I found when buying into businesses is that you can very easily become a sandbag. So and a sandbag is someone that has no dividends and you can't sell your shares. You're just along for the ride and you can't do shit.
Yeah.
So one of my rules is I never, ever, ever buy a business for less than 25% plus a share, because then you have a bit more protection as a shareholder there. And then, of course, you need to be careful with the drag and tag rights as well. But again, when you have that shareholders agreement with your property, all of that will be there. So, yeah.
So just going back a little bit to Sam Kidd, you've talked about this ability that you've got to, what's the right word, to create money, and you've created lots of money for yourself and for others over the last few years. But prior to that, you were a Royal Air Force pilot.
Yes.
So was it when you were up in the plane and you were thinking, I can see down there, and I'm going at a fair lick here, but I can see there's so many opportunities. What prompted you into this investment field?
I've always, so when I was 18, I joined the Air Force straight out of school. I only got 2 Ds for my A levels, but I did loads of air cadet stuff. But I started trading at the same time. And I've always juggled trading with flying. And to begin with, my flying career was great. And then my trading was horrendous.
Yeah.
And then things started flipping. And, I lost £2,000 per month, every month for 4 years in a row. Like the honey badger is my spirit animal. And when I want to do something and I keep losing, I don't give up. So I was a cocky, sorry for the listeners here, I was a cocky twat in my younger years. I was like this. At one point I was 21 years old driving around base in an Aston Martin. That, I thought I was Billy Big Balls, but that, from a social standpoint, didn't get me many friends.
No,
and then,
no.
At one point I was earning more than the station commander when I was like 23, still in a different Aston. And I was like, I look back at my younger self and cringe. But yeah, so the first 4 years of trading were horrendous. And then eventually things got better. And then as soon as I started making actual proper money, my Air Force career went to shit, to be honest.
Okay, right. But there was an inflection point, was it? Or there was a point at which you did something different. Now, that might have been investing in your base level knowledge. So you talked about Warren Buffett and his inspirations, etc. But was there something that happened around 23 years old, or up to 23, that made you not just an average investor, but a brilliant one?
Yeah, the 3 things are really. So yeah, from the age of 23 to 25 was like a massive cluster mess of activity, because I stumbled across the book Rich Dad Poor Dad by Robert Kiyosaki and got slapped in the face by that, realizing, oh my Lord, I'm never going to get rich in a job. I have to be a business owner. And so I went down the business route, And then I listened to one audiobook a week for probably 2, 3 years straight. Every self-help book you can think of, I've read it. Still to this day, one of the best books I've ever read is How to Win Friends and Influence People. Is it Napoleon Hill?
Yeah.
No. Or is that Think and Grow Rich?
Dale Carnegie.
Yeah, that's it. Yeah. I mean, that's a good book as well. E-Myth, everything. So I've done the whole self-development thing. And that just blew my mind. And so I realized, okay, so you can't get rich in a job, because a job is a very inefficient way of let's take things back. So the way I look at wealth generation is that most people are in a paddling boat or like a rowboat in the middle of the Pacific with no oars and no destination. They're just meandering, going with the tide, going with the flow.
Yeah.
And so with wealth generation, you need a target. Now, everyone's target's different. Like, you don't need to be a billionaire to live the life of your dreams. I mean, hell, like I realized that once you get to about, I don't know, 3 to 5 mil liquid net worth, your lifestyle changes the most. You know, and I always talk about liquid net worth, not illiquid net worth, because there's so many business owners out there that on paper are rich, but you know, and I've been that myself, but you know, the value of your business is worth loads, but I'm still struggling to pay the bills, you know, cash flow poor, so to speak. So I look at liquid net worth. So when you know, from, I don't know, let's just say when you get to about 500K upwards to 5 mil liquid net worth, your lifestyle changes the most. And you can stay like that forever and live the best life ever. You don't need to be a billionaire or centimillionaire. So first of all, so let's say your goal is to get to 10 mil net worth, liquid, illiquid, it doesn't matter. So that first of all, that's your destination. You're in the Atlantic or Pacific, right? At least you know where your target is. So then you have to going back to first principle thinking, what is the correct boat to get me to that target? So, you know, if you're crossing a lake, you don't need a frigate. You need, you know, a yacht maybe, or even a rowing boat. So if your goals are much lower, then your rowing boat may be okay. But you know, if let's say 10 mil is your net worth, then you need a frigate or a catamaran or something like that.
Yeah.
So in the real world, what is that boat? Well, that boat is business. You have to be a business owner. And I did some great studies, or they're not great. I did in-depth studies in I spoke to hundreds, probably thousands of business owners, and I realized that there were many one-man band business owners that were able to retire by the age of 55, 60, but comfortably, not like on the state pension, and you know, these were your leckies, your builders, your plumbers, etc. And I was like, so okay, you've beat the system. You haven't worked 9 to 5 for 40 odd years, you know, the 40-40-40 plan, but you know, you've done all right. And then I worked out that most of these one-man band business owners had applied 40,000 hours of work into their own vessel. So I was thinking, okay. And across the board, I realized that most people that had retired, they'd probably spent about 40,000 hours in their business. So I thought, how can we accelerate that? Okay, staff is the issue. And then, I started interviewing and chatting with bigger friends, bigger business owner friends. And, you know, some of them had hit their targets much sooner, you know, within 10 years or so. And I realized, so you've got 5 staff plus you. So that's 6 people working at least 40 hours a week. You know, the business owner will be doing, you know,
a bit more.
18 hours a day. But then they got to that 40,000 hour mark many years faster. So staff really are a force multiplier in terms of getting to that 40,000 hour mark. And so I just keep scaling that way.
So, I mean, this, for anybody listening to this, I think you've looked out. You've found somebody who you might not have known of, although you are quite well known, Siam. So I mean, you ended that.
I'm a nobody from Norwich.
Oh no, well, I don't know about that. Well, anybody from Norwich is not really a nobody. I mean, you're in great company, aren't you? I mean, who else is a famous Norwich person, Kevin? Do you remember?
Alan Partridge.
Delia Smith.
Delia, yes.
Delia Smith. Yeah, all right.
I drink a lot less than her.
And you've got a good, honest football team there as well, so that's not a bad place to be. But you're an avid gamer. You enjoy flying airplanes and helicopters just for fun. You like you said, you started life really with precious little in terms of education, but you educated yourself. And
Mm.
you're now in a position where you are um, about to, well, this fund is launched, isn't it? I
Mm.
believe. So basically, you're now trying to attract a number of wealthy individuals to sort of come
Yes.
along with you on this ride. What what kind of ride is it going to be for them? And what might they expect if I don't know, they throw 50,000, 100,000 at you? What would they
Mm.
expect from that kind of level of investment?
A turbulent but single direction journey, really. So,
Yeah,
like, we're heavily invested into or allocated into, as I said, open source AI that straddles the crypto world.
yeah,
Now, anything crypto related, volatility is through the roof.
yeah.
Like, an S&P 500 investor will be happy with a 10% year. 10% in Bitcoin is like a random 3 o'clock on a Tuesday. Uh, like for a split second, and then 20% down, 50% up. I mean, just look at prices today. It,
Today's
so
a good day to sell.
sorry?
Today strikes me as a good day to sell.
No, no, no. Well, again, depends on your epoch trading range. So if you're going to scalp some quick profits, then then yes. But the fractals show, you know, so for example, I can't share. This will
Don't
probably
worry.
be
Just
irrelevant
just
to your.
describe what you're seeing. Describe what you're
Like
seeing.
yesterday, so I'm all about mental models. So everyone should have a mental model in whatever you do. And your
Mm,
mental model needs to be predictive. And if it's not predictive, you then need to tweak your mental model. And you should be continually interrogating the data set from which you base your opinions on a daily basis.
right.
Whereas most people, they don't have a mental model, they're not predictive, and they are reactive in life forever.
Mm,
So, oh, I hate saying this because it sounds a bit wanky, but I've predicted so many things since sort of 2016 onwards that
mm,
some of it is quite spooky.
mm,
Um, and like, here's an example of a very, very insular small thing is that yesterday I put in a cheeky Bitcoin long. So I went long on Bitcoin as I so with Bitcoin, it's irrelevant who wins. Dems, Republics, doesn't matter. What happens in the lead up to US elections is that you have volatility. Bitcoin goes down a little bit, elections pass, and then it's only up every
mm.
single time. 2016, 2020, now it's looking like the same. So, I placed a trade yesterday morning and it's now $60,000 up. Um, and that was based on my mental model because I knew that there'll be turbulence or tiny volatility in the run up. Once we had a clear winner, it would then shoot up, and crypto across the board has as well. Um, the so I've completely lost your question. Sorry, I'm
I was
ranting.
suggesting that because you've had that turbulence, it's shot up today, that
Mm.
today's a good day to sell.
Oh, sorry. Yeah, yeah. If you wanted to sort of snatch some profits, but I guess where I sit with, I guess, the amount of capital that I sit on, so to speak, I have to take a slightly longer approach. I can't be, buying and selling every two seconds. And my, trade the plan, sorry, plan the trade the plan, is very important. So for me, it's Q4 2025. So if my fractals are correct, like my cycles, like in previous cycles, we should see a blow off top Q4 2025.
Now, when you're using terms that many of us will probably think, I kind of get it, but I don't
Ah,
quite get it.
sorry.
So,
Yeah.
first of all, let's deal with the word fractal because I think I understand it. But basically, just let's sort of unpack that one for a minute, and then
Yeah.
what does blow off the top? Presumably the top of the market, but basically, let's go back to the fractal. What does that mean?
Yeah. So it's funny, there's a 90% correlation between crypto and the conventional market. So let's say the S&P 500, the FTSE 100, etc. So there's still a risk on asset. So risk on and risk off means if everyone's happy in the world, all the risk on assets like stocks go
Yeah,
up,
yeah,
hence crypto as well. And when everyone's scared, everyone flees to cash or the dollar, and stocks go down, etc. So there is a correlation at the moment. Now, as well as that correlation, crypto, because it's such a new and young asset class, it repeats itself, and it moves in very predictable and almost identical ways, like nearly always. It's that old saying of, history doesn't repeat itself, but it rhymes really freaking well. Well, crypto has taken that metaphor and gone, oh yeah, well, let's do that. So you have these patterns that repeat and repeat, but as the market cap grows, as the amount of money sloshing around in crypto grows, these patterns just get a bit bigger. It's the same pattern, but they just get bigger and bigger. So I call them a fractal. Just like in nature, you have, if you were to zoom into an ice, like an ice particle of some sort, see all these recurring fractals.
Yeah, I mean, I've come across it in terms of the 80-20 rule. So, you take the 20% that's generating the 80%, and then you have a look at that again, and it's got an 80-20.
Oh, yeah, 100%.
It's that kind of level of fractal. I think I've heard that phrase used in that sense. So, okay. At the other end then, so why do you think that it's the end of next year or Q4 next year that market's going to sort of reach its zenith? What's that about?
Yeah, so the world runs on a 5.5-year liquidity cycle. So there's $350 trillion worth of debt sloshing around on the planet right now. And because most of it is actually on a corporate basis, so all the loan terms are typically 5 to 6 years old, which means on a yearly basis, the globe has to roll over roughly $70 trillion, which is just insane. So we get market crashes, stock market crashes, recessions, when there is an inability to roll over that year's debt. So, and this is something that not many people understand. And I have to do a big shout out to Michael Howell from Cross Border Capital. Michael's probably the world's leading expert on global liquidity. So this is not my research. This is, I follow Michael. You got to follow people that know their shit. And he knows his shit when it comes to global liquidity. So what happens is that you have so the globe works on this 5.5-year sort of sinusoidal pattern. And you have stock market crashes when there's a liquidity freeze or a crunch or inability to roll over debt. And then eventually, and that's what we saw with QT recently, a quantitative tightening. But when you look at this graph, we're now at the bottom of this 5.5-year cycle. So we're now on the up. So again, this was part of my predictive model, and it's coming true now. I said that, end of 2024, you're going to start seeing a big release from quantitative tightening. Now, and I said they will have to cut rates. So what happens is that you have a mass cutting of interest rates. You then have some sort of market crash, some sort of equity wobble of some sort. And what do politicians and bankers always do? They try and print their way out of oblivion. And that's when they turn the spigots on. And so you'll have, before we've had QE, ZERP, NERP, and all that sort of stuff, and all these stupid little 3-letter abbreviations, you're probably going to have quantitative support next, where they'll just print money into oblivion. And it's when that happens, we get to the top of that sort of 5.5-year cycle. Same thing always happens. You go back to 100 years, it's the same thing. Everything booms, and crypto happens to be on a 4-year cycle, which is lockstep on top of this 5.5-year liquidity cycle. And at the moment they're in lockstep, but because there's a different sort of frequency, they're going to disconnect at some point. But at the moment, 2025 is that beautiful sweet spot where we have global liquidity about to spurt out, and the 4-year cycle for crypto. And so for me, like if you never hear from me again, wait until the central banks across the world start printing like crazy, and then give it 6 months, and then start phasing out of your crypto. So I think it's going to be Q4 2025, but it could be summer next year, or it could be Q1 2026. So it's a rough sort of. But for me, it's event driven, not time driven. So in trading, you should never have on this date I'm doing this. It should always be process and event driven. So for me, wait for the central banks. That is the starting gun.
And this level of analysis, which is frankly amazing, this is what you get as an investor in DSV Fund.
Oh God, yes. Yeah, I do nothing but sit on my arse all day and look at the screens.
Yeah, well, whether you're in an aeroplane or in
Yeah.
your office, I guess.
Yeah.
Yeah.
Yeah,
And
which
crypto's
flight simulator are you looking at all day?
Oh no, I've got a plane, so I go flying. So in real life, yeah. So, but yeah. And the thing is, crypto is very fiddly. It's very easy to screw up. It's very easy to get hacked, or no, not hacked, socially engineered. And so this is what. So it's weird. There's a lot of money sloshing around in sort of in fund of funds, family offices, very high net worths, etc. But these people, and this is not me throwing shade at all, but the people in money these days are Gen X and baby boomers. And typically, big black tar brush here, the average Gen X, the average baby boomer has no idea how to even buy Bitcoin, let alone store it safely, let alone know when to buy and sell or to sidestep, etc. And so that's where DSV comes in. We will, I spend all my days just making sure I'm ahead of the AI curve and the crypto curve. And there's a sweet spot where they're both merged.
Question there, Sam. If you like what you've heard, okay, and I can see a lot of sense in what you're talking about, but you're talking about very high net worth individuals, family officers, so on. But what happens? You don't have £50,000 to invest, but you can see, oh, I've got £2,000 or £3,000 hanging about in the bank.
Yeah,
that's somewhere. How would you then go about taking advantage of the sort of stuff that you've just been talking if you're not kind of in that liquid position to invest a big amount of money?
It is a great question. And for the viewers here, this is not a scripted question. I have no idea the questions that Kevin's going to, or Graham's going to ask. So this has been one of my biggest sort of drivers over the last 10 years, really. One of my companies is a training company, because I think, like, in order to get to the next generation, it's a longer process. So I've taught thousands of adults financial education, like real wealth generation, hoping that they teach their kids, etc. And most people, and what I say to every potential DSV investor is, don't put your money with us, because you'll save a fortune in fees by learning how to do crypto, learning how to do, to buy it, sell it, to store it, knowing when to flip flop out of it, blah blah blah. And there are so many resources out there on the internet. We live in a world of LLMs, YouTube, and Google. So anyone, if they're genuinely going to prioritize their future financial prosperity, spend 20 hours watching, tutorial videos. Like, just go into YouTube, spend 20 hours on focusing on how to buy Bitcoin properly, or whatever. Not just my videos, look at others, etc. And I mean, people probably spend 20 hours planning their next holiday or buying their next car. Yet they can't be asked to spend 20 hours learning about the fastest growing industries ever, crypto and AI. But that's fine. So for those, let's say, we've got a couple of grand, as I said, the world's wealth flows from the uninformed to the informed. So your job, your responsibility as a father or a husband or wife or mother, etc., for your kids is to learn more, just become a higher information person. And by the way, low information people are the people that are reactive in life. They don't predict stuff because they don't have enough information to predict stuff.
Yeah.
And so you just got to learn stuff. And what I've actually done, it's not out yet because the printers have screwed me over. They've delayed this by 3 weeks now. I wrote literally 80-odd thousand words for that person that you just sort of mentioned, Kevin. So for someone that is not for DSV, that wants to do, actually learn, I literally made this book. It's called Get Filthy Rich Between 2025 and 2030 with Cryptos and Robots. I've literally done it step by step, the future businesses I'm setting up in a couple of years, It talks about crypto, AI, like everything. So it's out in like a week. The printers are screwed me over. So
Well, that is
but
an amazing opportunity. What we're going to do is we're going to reference that and how to get it in the show notes. And
Hopefully, by
Siam
the
Kid,
time this episode, you're listening to this episode, well, that week or 2 weeks
oh yeah.
has passed by, and the book is available. So
oh,
let
right. Okay. Yeah. But all I wanted to do, Sam, is just to say thank you for joining Kevin and I on the next 100 Days podcast.
Thank you for having me.
So, Graham, I'm really pleased I asked that last question. How does somebody with relatively little money get into all of this? Because I've suddenly discovered a book that's going to be #1 on my reading list, I think, in the next few weeks.
Yeah, I genuinely think Siam Kid is worth listening to and reading and learning from. And the beauty is he's done it, he understands it, and he's picked out two markets that are set to absolutely scream away in terms of value, at least until possibly the end of next year, which is the end of 2025. So that would be an interesting investment. But whether you want to get into the fund or whether you want to read the book to use your funds in a productive way, it's been an absolutely fascinating podcast with Sam Kidd.
And I think one of the interesting things to watch now, we've just had elections this side of the pond and far side of the pond. If we're going to have this fantastic boom coming up, will the politicians all claim credit for it? Bet they do, whichever the flavour is.
Well, you can guarantee that the socialists won't have a clue. But basically, the thing is, in America, they have somebody who's got a definite plan, all about energy, and the energy by making sure that he's got energy, out into the market, all that, the ability to actually make prices come down relatively quickly. Then I think you'll find he might just prevent people from lobbing loads of money to a useless war. And basically, with a bit of luck, the liquidity that governments have and the ability to actually spend on things that are really important rather than things that are frankly not important, then basically he might be a real force for good.
Well, let's see what happens.
And on that bombshell, I've been Graham Arrowsmith.
I've been Kevin Appleby. Goodbye.
Goodbye.